In last week's Weekly Wealth Digest, we covered reasons to sell a stock. As promised, I want to follow up that essay with reasons not to sell. All of this, of course, relies heavily on you doing your due diligence before buying. Here are my top 10 reasons to not sell. Number 10, the company reports a bad quarter. Even back to back, if the fundamental story is still in place and the company is undervalued, then this may actually be a time to buy. It takes time to see implemented changes hit the bottom line. However, most market participants are too scared to hold a stock longer than a few days. So use this as an opportunity to accumulate more shares. Remember, a reaction to financial filings is a reaction to old news. Number 9, sectors in a bear market. This is actually a great reason to buy, not sell. If you can find a great company that is discounted because its sector is down, then that is how you will get rich. Buying the top 5% of businesses in an industry that is left for dead is a sure way to rapidly accumulate wealth. Number 8, a bad write-up about your company goes viral. Hedge funds often use ghost bloggers to attack a company they are about to short or are currently short. Lies and market manipulation is the norm, and don't believe anything you read, especially about a single investment. Verify everything for yourself, and don't be shy about picking up the phone and asking to speak with an investor relations representative. In a 60-minute story a few years ago, a former hedge fund employee admitted that they had an entire team of people whose job it was to go on message boards and make up lies about a company and to try to scare people out of a stock. Number 7, you're worried about global events, war, currency collapse, and other things you can't control. Good businesses have done well and held their own during wars, hyperinflation, deflation, and even regime change. Again, this all comes down to focusing on good businesses ran by honest people. Number 6, position size becomes more than 10% of your portfolio. I disagree with most analysts on position sizing. If a business you own runs, mind your trailing stop and let it run. Why cash out on a winner just because it went up? Set a trailing stop and let your winners ride. Number 5, you inherited a stock. Dave Ramsey will always tell poor callers to hit the bid. But just because you inherited shares of a business shouldn't be a reason to sell it. Number 4, a temporary decline. Everyone knows the feeling, stomach pain, and doubt. But that usually signifies the bottom is in and it's about to bounce higher. Remember, the market itself is full of emotional buyers, is highly irrational, and is extremely bipolar. Never allow market sentiment to help you with your investment decisions. Number 3, media predicts a crash. Unfortunately, this never works out. Today is a good example. The markets have fallen 3% from their all-time highs, and every story is about the imminent summer collapse. Deserving of a correction, yes, but since so many are now speculating that a crash will happen, I am pretty confident it will not happen. Choppy in August and September, but with so many predicting a crash now, I truly think it's off the table for the short term. Number 2, fear of inflation. FutureMoneyTrends.com is forecasting a currency crisis within the next 6 years. Many others are worried about severe inflation or even hyperinflation that may be imminent. If you are one of them, don't sell your stocks. Stocks have proven to be a great hedge against inflation. Unlike cash or fixed income, stocks are backed by real assets. Fractional ownership in a business that can raise prices, owns assets, and in some cases is a needed enterprise. Number 1, the stock remains undervalued for an extended period of time. Buying an undervalued business is like buying a $1 bill for 75 cents. Even if it takes the market years to recognize it, if you keep doing this, you can and should expect higher than average returns with a lot less risk. In all of these examples and suggestions on why not to sell a stock, the virtues of patience, discipline, and wisdom will be needed to be applied. A key to successful investing is to overcome your emotions. Have a prosperous week. For more wealth building ideas and strategies, visit FutureMoneyTrends.com.